Good afternoon. Good afternoon. Good afternoon, Mr. Ahmad. Welcome.
How are
Just
you?
a few. Oh, good. Oh, good, Mr. Ahmad. How are you?
Good, man.
Yeah, man. Yeah. We just want to, just to hold to wait for like a few minutes to see if few people they're gonna join us.
No problem.
But yeah, all right. All right, Mr. Ahmad. It looks like
Am I
it's
the
just
only
you
one
and
here?
me. Looks like it's just you and me and the other lady there who started from 360. So, all right, let me just go through for what I prepared for today for you because also you want to learn and I think it's worth it. Even one person to to know information, it's always worth it to share the
No,
information.
definitely.
Yeah. So definitely what I wanted actually, to preach today with a lot of people, if they could have joined, it's about the fundamental analysis, to understand how the fundamental analysis and how they actually work when you are actually in a market, when you are actually trading. I'm not sure, are you familiar with that fundamental analysis?
Yeah, I am familiar with the fundamental analysis, pretty much, but more basic.
Oh, all right. Yeah. So pretty much the fundamental analysis, it's actually, it's based on analyzing the news, right? The news that comes and take advantage about that news and participate in a market and be able to make something out of it or be able to make money. But the most
it's
key
just like
point,
NFP, Yusuf, and those
ye
type of news.
yes. So that's
Okay.
like NFP, but because of there's a lot of fundamental news that comes, each and every day that drives the market. I always tell a lot of people that when it comes to trading, it's all about the fundamentals. The technical analysis is just to show you what has been happening in a previous trades or in a previous movement of the trade of the market. But to be pretty much what actually drives the market is the fundamentals that are happening in a daily basis. Once you master those fundamentals and understand how the fundamentals, the results of fundamentals mean and how it drives the market, that's where you're gonna now start, having the clear understanding why this market is dropping. Because some people, they will ask, no, did and I put my take profit, but why the trade goes in another direction? It's because clearly you didn't know that the market that you are actually analyzing is based on the fundamentals, is based on the news that are happening every single day and that are actually driving the market. So you were analyzing on a past previous fundamental movement of the market. You are not analyzing on a present, fundamental of the market. If you knew the present fundamental of the market, maybe you could have done a little bit better. But because of those technical analysis, is actually based on a previously fundamental release of the market or results of the market. So just to go through a little bit, I'm going to show you again, Mr. Ahmad, in terms of the chart and see how it actually, push the market. So the fundamentals provide a method to set the financial value of the company, securities, and the currencies. Included in a fundamental analysis, it's a basic qualitative and quantitative information that contribute to the asset, financial, or economic well-being. Well, is called microeconomics fundamental, including the topic that affect an economic at large. So understanding the fundamentals in businesses and economics, fundamentals represent the primary characteristics and the financial data necessary to determine the stability of the health of that specific of asset. This data can include microeconomics on a large scale of the factors, and as well as micro on a small scale of factors as a value of the security of the business. So basically, it's just the release of the performance of that specific company or maybe specific areas, in terms of the region. From Canadian dollar or a GDP from maybe France. Those are the type of things you need to understand the results, and you look to that instrument as well. So the main fundamental forces in Forex in terms of the fundamental analysis. The fundamental analysis is aware of looking at the market through the understanding of the economic, social, and the political forces that may cause the market to react a certain way according to those, reference of a Wall Street Journal there. This kind of analysis, it's usually used by those who have studied in these different fields, says financial, accounting, economics, and the politics, and as well as a commerce subject. But of course, this is like people who actually studies these fundamentals, but you and me, we can be able to study fundamentals. There's a websites that can help us to actually understand and to know when these fundamentals are coming and take advantage of that and be able, to translate it in the market. So the impacts of the fundamental affects the supply and demand of the currency pair, and that's where the national banks come into the play, because they print out of the money to have a growing and lucrative economy through buying and sales, as well as other factors as well. So I'm not going through. So this is one of the fundamentals that you find, retail sales. So retail sales, you can find it whether in Britain, they will have a retail sales, whether in Canada, they'll have a retail sales, whether in the US, they'll have a retail sales. So you can hear that it's over 4, 5, 6 retail sales that comes in a month. It means each and every week, there will be a news of retail sales based on a specific region. The other one, it's non-farm payroll. Again, it comes to all major instruments. You know, it comes from Japanese yen and farm payroll. It comes from Great British. It comes from US. It comes from Canada. It comes from New Zealand, and it comes from Australia as well. So every week there will be some type of unemployment rate release. And if you look at that specific instrument, it gives you the volatility. And when we are trading, we are looking for the volatility so that we can make money. If you trade without a volatility, then you just, wasting of time. But when you trade where the volatility is, that's where you can be able to make a significant of money out of that trade. But in order to understand that volatility and how it's going, how it's moving, is to understand the fundamental news that comes and that affects the market, whether positive or negative. So, okay, so there's non-farm payroll. Mr. Ahmad, at least you already know about non-farm payroll. The other one that comes, it's a monetary policy. So monetary policies as well, it drives the market in terms of how the market is gonna look in terms of interest rates, and as well as how consumer price index is gonna perform, called the CPI, right? So let me try to show you
For
where.
1 minute, sorry. So your CPI and your PPI are that traded on the same day or different days?
So CPI and PPI, they're traded on a different days, but
Okay.
sometimes they can be on a same day, depending
Okay.
on a specific month, how the month has looked like.
Okay,
So
perfect.
first of all, to understand it clearly, what starts the cycle of the fundamental news? It's a non-farm payroll. So
Okay,
that's the
yes, that's the
first.
first, or that's on the first Friday of each month, am I right?
So the first Friday of each month. So now, if the first Friday of the month it's on Monday, right? The first it's on Monday. They
Yes.
don't release the non-farm payroll. They postpone it to Friday because it's the first Friday, right?
Okay.
So if the first again, let's say it's on Wednesday, they don't release that economic calendar on that specific day. They correspond it to Friday because it's the first Friday. If the first
Okay.
of the week it's on Sunday, they will correspond for the whole entire week to the Friday. So that's why
Okay.
you find some other days CPI and PPI are on the same day,
Okay.
but not most of the time. All right, so let me just give you example where you can be able to check these fundamentals, Mr. Ahmad. I don't know, do you know any website that you can check the fundamentals?
I use my FX book.
Okay, so I think one of the pages that you can check, it's a Forex Factory. If you can
Okay.
see it, Forex
Yeah, I can see.
Factory
Yeah.
from Monday tells you Great British Pounds, there'll be a bank holiday. So you don't expect a high impact volatility there on Mondays, which week, this one was for this week. So where it's red, that's where it shows the high impact volatility. That's where it's the biggest news, we can say in that way. So you can see consumer, CB consumer confidence, high consumer price index from Australian dollar, and
Yeah.
it's on 3:30 a.m.
Okay, yes.
All right. So now, if you're a trader, you want to trade consumer price.
To wake up very early in the morning.
Then you have to wake up very early in the morning to catch that volatility of consumer price index. If you wake up at 8 o'clock, that one, it will be gone. The Australian dollar, it will be performing normally without that much volatility. So you don't make that much money unless, you know, you are those guys who scalp. And that's where there's a trick of trading. Because of you don't catch the volatility, you are forced to open so many trades so that you can make money.
Yeah.
But now if anything happened, now you're in a bigger deficit, you're in a bigger loss because of you actually open so much trades at one time to actually, you know, make money. But if you catch a volatility, you can actually open 2 trades at specific time. And if your prediction is correct, those 2 trades can bring you a very, very good profit in a very short period of time.
Cool.
Right? So you can see goes to Thursday. So that's how the calendar looks. German CPI, as I said, there's a different CPI, different PPI that you find per week. You can see that means this week there was US GDP, growth domestic price index, actually from US, it was on yesterday. It actually pushes the price all the way to Friday today. The big one was 11 a.m. from Europe, CPI as well from Europe. Canadian, they dropped the GDP as well. And Sunday, there's a China manufacturing PMI. Then all the way until next week again, you can also check and to see where exactly it's going. So for example, let's say today it's Friday, we're already on 1549, but the GDP was the one from Canada, right? So we try go on a chart. So let's say we look on Canadian dollar, USD CAD, okay. Right? So United States dollar versus Canadian dollar. Okay.
So you look at the hammer movement, as you say, it's probably.
Okay. So first of all, I don't know. Do you know what is this?
Yes, that's for trading times. So 1 hour,
yeah.
1 minute, M1, M5
yeah.
minutes.
Yeah, correct. So these are trading time frames. So the most important is to go to the biggest time frame, which is at least if you're a day trader, it's 4-hour time frame, right?
Oh, yeah.
Yeah. So at least just to view the chart and to see how far it goes and how far it's coming from. So it takes you from 31 July. If you go to 15 time frame, it will take you from 29 August, right? Just which is today, to view your chart. But if you go bigger time frame, it shows you what happened all the way to 29 July. But you can come with it maybe to 1 hour as well to see 23, maybe for this week, gives you how the market has been performing this week. Now, if you go to 15 minutes, this is the GDP volatility. You see it pushes the price all the way up. And you can see the whole day from 29 to 30, the whole day, there was no that type of candlesticks, that type of movement.
So I'm looking at that. You could have made quite a good money here because there was probably about 100 pips here.
You see, so if we check from pips, let's see. So from this point to here, it gives us 447 pips.
Sure, quite a lot.
It's quite a lot of pips that you can collect from here. If you actually traded with the even 0.02 for this trade, you can make easily $100, $200, $250 out of this move. And that's because of the GDP, right? But all along, nothing has happened. All along for the whole day, the market was actually in this, not even In fact, it was in this volume. Right here, you could make $3, $2, $3, $2, wasting time. But when you catch this one, it gives you $300,
It gives you, yes.
$200 at
Wow,
one
yeah.
time. So the reason why you can see the reverse here is because of now we are sitting on a New York
yeah,
session.
the market is opening now, yes.
Market has opened for New York session. So we can see the pushback. That means the dollar, it's time for dollar now to start getting a little bit of momentum. And the dollar has gaining a momentum. That's why it's dropping. So what happened is, if the results of the GDP from Canada was strong, was positive, the market will just play around and be at this position. Let me see. Be at this position and then 10 again, continue, goes up.
Sure.
So it might come, if the results were positive, this is where this market, because of maybe today it's Friday, it might push during the weekend, but this is the level that the market, we can see that, look at this candlesticks that I'm seeing on 4 hour. Look what it did.
Looks like
It
it's
pushes the price,
pushing up, yes.
Right? And then it comes all the way down, right?
Down.
Now, we'll see where it's going to go. Sometimes it can push, is trying to retest and went back again. Once after 4 hours, it closed above, then it breaks this zone. You see this zone?
Yes,
so if you go on for, this is the zone. So there's a high possibility it can test there and come back and leave it like that. It's going to test there and come back, trying to pull everyone who think it's a buy and who's panicking, right? Take them out, because a lot of people, they'll be closing the trade here. They'll be like, hey, you know what? The trade is getting hot. Let me close the trade. Let me close the trade. Let me close the trade. And then later on, maybe when you check it on around 5, you see it's starting picking up again. And then break this zone. We are looking for this area. This is the area where there's no volatility. Definitely, this is where it has to go.
Sure. Okay, now I understand.
All right. So when it comes to, okay, let's see another example. So another example today, 2:30, it's already gone. US core PC price index, that happened 2:30 p.m. So if we go to a chart, so we look for a dollar instrument. Let's say, for example, we look for US 30 or NASDAQ, right? So this is this today?
So there was
No.
a drop, no?
Yeah, so this was yesterday. This was yesterday. That's 29. This was yesterday. And if we check it, what actually drive that drop, yesterday was Thursday. GDP, US GDP.
Yes, sure.
Pretty much the US GDP and employment claim, they come a little bit of negative. And that's why we saw US 30 and NASDAQ actually drops to these levels. Right? Actually, yesterday, I thought maybe the GDP is going to be positive. That's why I put my buy there, anticipating that it's going to go all the way up. But just to show that the earnings that comes during the week from NVIDIA, it's one of the the biggest companies from Magnificent Seven. It's actually positive. So that's why NASDAQ, as a technology instrument, it start picking up. So we can start picking up. What actually it's looking for, it's looking for to get to 19,629 by the end of today. And so then the bigger target.
That's like a 600, 500 pop gain, that means.
Yeah. So right now it's 19,500.
510. So yeah, it's
That's
100 bucks. 100 bucks.
Yeah, 120 pips. That can actually, accumulate by the end of today. Obviously, the market will be closed weekend, but by Monday, we are anticipating a Nasdaq to be 19,600 going to 19,700, right? But again, it's not where exactly it will end because of Nasdaq is coming from far. It's coming from 20,000 to 21,000. So anticipation, there's a couple of breaks that we can break here. It'll break on 19,600. It will break on 19,750. It will break on 19,890, and then all the way to 20,000. And that's where you can actually have a different take profit. Take profit from here, take profit from there, take profit from there, and take advantage of it.
No, good.
Okay. So you got it?
I've got it.
Regarding the
Very informative, very informative, yeah.
Yeah. What else maybe in terms of the examples? All right. So as I said that, things like CPI. So let's say, for example, this week, we are seeing CPI from Europe. We are seeing the GDP from US, GDP from Canada. So this is a week of GDPs and CPI. CPI from Australia. Now, if we go next week, you might find that you find also CPIs, but from different regions.
Yeah.
So bank
Okay, there's a
holiday,
CPI
Canada and US.
That's source, am
So
I right?
there's a CPI from China.
Oh, China.
China CPI. So you can trade like Hong Kong 50, China 50. There's a GDP following week from Australia. Because this week it was from there's a Bank of Canada rate statement that is coming on Wednesday. There's a Bank of governor from Australia, Bank of Australia speaking, having also high impact movement there. Then there's a non-farm employment change. Non-farm employment change on Thursday. And then I think on Friday, there's NFP.
NFP, yes.
NFP is this coming Friday. All right. So yeah, that's it. That's it, Mr. Ahmad. That's definitely
thank you so
what
much.
I was.
That's a very informative session.
Yeah. Just unfortunately, a lot of people didn't join in, but yeah, that's it.
Yeah,
in terms of,
it's their loss and my gain.
It's their loss. Yeah, they could have been in so that they can know this. But the other thing also, what is most important is, you should try to test the market, because the market.
So I have opened up a demo account and I'm gonna play around with it.
Yeah, play around with it. Even the live account also is needed because of the feeling that you get with a demo and the feeling that you get with a live account is different.
Yeah, it's too different, yeah.
So that's where a lot of people, they made mistake because of they don't want to go through to a live account. Live account, it gives you that patience or that ability to have the patience in the market.
Yes.
Because in a demo, you'll be starting with $3,000, but I'm not sure you're gonna deposit $3,000 when you start.
Yeah, yes, yeah, it's almost like giving you 60,000 rand, yeah.
Easy. So that's the difference. So that's why you need even to put a small amount of money just to test it while you're testing with the demo, while you're preparing to start it clearly and properly.
Yeah, Yusuf, thank you.
All right. No problem, Mr. Ahmad. Thank you very much. And I think we already push for over 30 minutes. I think, yeah. Maybe we will do it again next week, Friday.
Yeah, definitely. Thank you, Yusuf.
All right. Thank you. Have a good day.
Bye. You too. Bye.
Bye.